Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
We are talking a lot about AI again today. Shares of Meta platforms are rallying. Few things going on I want to point out. Company's head of Instagram putting out some posts on Threads saying that it has begun testing ads there. And then before that, and here's the AI twist. Earlier this morning, CEO of Meta, Mark Zuckerberg, in a Facebook post, said that Meta plans to invest as much as $65 billion in projects related to artificial intelligence this year, including building a giant new data center and increasing hiring an AI team. So, Tim, we know that they've been spending big, but this is even maybe a lot more than folks were anticipating.
Yeah, here to unpack it all is Bloomberg News technology reporter Kurt Wagner. Kurt, also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. Kurt joining us from Denver. Kurt, I saw this news break this morning before the market opened, and my immediate thought was, shares of Meta platforms are going to fall on this because investors are so concerned, I thought, about how much companies are spending on CapEx. We saw it move other companies when they've reported these figures. But no, we're seeing the opposite reaction. Why the optimism?
Yeah, I think AI is just some like magic elixir, apparently, that you can, say, hey, we're spending a ton of money. People don't love that. But as long as you throw, that money is going toward AI investments, people are a lot more on board. I do think that Meta, more than maybe most companies, already has a running start on the AI front, right? I mean, this is not like a standing from 0 to 60 kind of thing. They have chatbots in all of their apps right now. They already have smart glasses. They built, they're up to almost Llama 4, right? Their fourth version of those large language models that they've been developing for years. So I guess if people are excited about the stuff they've already seen from Meta, the idea of throwing even more money onto that fire might resonate more with investors than maybe some other companies doing it that don't have the track record Meta does.
Gotta say, Kurt, it feels like this high stakes AI poker game because, here we are in a week where we have talked a lot about AI, and you had coming out of the White House a bunch of big tech folks there, that $100 billion joint venture that was announced called Stargate, OpenAI, SoftBank, Oracle, President Trump helping to announce that on this AI infrastructure spend, a big time. It just feels like, okay, you did $100 billion, I'm going to do this, It just seems like the timing of it is kind of interesting. And then you've got Meta reporting next week, like why didn't they do it then? So help me understand kind of what's going on and maybe why Meta did this right now.
I think the timing is certainly not coincidental. My guess is that they were planning to announce this at earnings, that they saw the other announcements you mentioned from the White House earlier this week from some of their rivals and thought, hey, this is getting a ton of attention. All these stories are being written about this huge AI investment, but we're not being mentioned. Let's go ahead and, jump the shark a little bit on our own announcement from next week to make sure we can ride this news cycle. That's my guess. They'll still be talking about it at earnings next week, of course, but you never want to let all of your competitors have all the fun, talking about this stuff while you're sitting on, what they consider to be a massive investment as well. And so I don't think the timing, though, was coincidental at all in terms of why they did that today.
Kurt, are analysts and any analysts out there saying it could be possible Meta's overspending on AI or any of these companies are overspending on AI? Because that's a sentiment that Mark Zuckerberg actually shared with Emily Chang over the summer here on Bloomberg. So, has something shifted, or is there that possibility still there?
Well, I was just about to say, I'm going to do you one better. Not just an analyst who's saying maybe they're overspending, but as you point out, the CEO himself is sort of admitting, hey, we're probably overspending on this thing. Look, I mean, I think the idea here is you are willing to take the short-term loss of a couple $1 billion, even $10 billion. Maybe they don't need to spend 65, they need to spend 55, and you're willing to take that loss, knowing that you're going to get 10 years down the road and not be like, gosh, I really feel like we didn't invest enough at that time and we're now behind, right? We're behind Google or OpenAI or whoever. And so It's easy to say that, and I do think people are willing, to bet on Mark Zuckerberg. He does have a track record of success, and he can kind of get away with overspending right now because of that. And so, I very, very much agree that we could be in this maybe a little bit of a bubble here where they're overspending, but at the same time, what's the trade-off, right? Like, you don't want to get down the road and feel like you missed the boat.
Hey, Kurt, before we let you go, you got another story out talking about Meta's Threads are set to show ads for the first time here in the U.S. and Japan. To remind everyone, this is sort of the ex-Twitter competitor that emerged a couple of years ago in the wake of everything that was happening at Twitter/X. What do we know about the monetization of that platform, the popularity, the staying power of that platform?
Yeah. Well, first talk about coincidental timing, right? So they say, hey, we're about to spend $65 billion on AI, which, as you mentioned, might be a little too rich for some people. Well, then they follow that almost immediately with, but don't worry, we have this new revenue stream, that we're about to turn on with Threads. Threads, for those who aren't familiar, is the Twitter clone that Meta launched about a year and a half ago, has 300 million monthly users. And I think they're pretty well positioned, right? I mean, the advertising, this is what they do, is what they do with Instagram and Reels and Facebook, of course. So turning it on for Threads, I don't think is necessarily this huge thing for them. It's just yet another audience for them to monetize. So we'll see how quickly they ramp up this thing. But again, I think the timing of announcing that goes hand in hand with the high spending on the infrastructure stuff, because they're trying to make sure investors know that there is a new revenue stream coming online, even as they spend heavily on AI.
Always good to look at all columns of the balance sheet. Just going to put it out there. All right. Yeah. Thank you so much. Kurt Wagner, Bloomberg News technology reporter. He's also author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Well, the euro was headed for its best week in more than a year. This as investors pared back expectations for interest rate cuts, also betting that the U.S. trade tariffs won't come into force as soon as many had previously feared. Nonetheless, companies and their C-suites are trying to game out the different scenarios.
Yeah, that's especially true for any kind of tariffs that might come out of the Trump administration. For more on that, let's get to our next guest, team of guests, I should say. Bloomberg News senior editor Nina Trentmann. She's family. She's here in studio. And then we've also got with us out in Germany, the chief financial officer of Ebm-Papst, Harald Klaiber. He is, by the way, featured in the Bloomberg CFO briefing newsletter that comes out on Sunday. It can be found at bloomberg.com/CFO-briefing. Welcome to both of you. Harald, I want to start with you. How are you planning or thinking about planning for trade tensions and possible tariffs from the Trump administration? What are your expectations?
Yeah, well, I think, first of all, thanks a lot for having me this afternoon. I'm pretty happy to share our thoughts on a couple of things with you. When we look at the new administration and the potential trade conflicts coming up, I think we need to step one step back, actually, because from a predominantly overall business strategy, we are running on clear local for local approach. That means that we, for a couple of years already, build up local competence, which is true for the US market as well as for the China market, just in order to have a proximity to our customers, supporting them and also being speedy and flexible with their demands. So that is the predominant reason why we are building up quite independent organizations in all the regions. And that, of course, is also now a big advantage, having a sufficient portion of local value creation, which makes us a little bit more independent from overall trade flows. And that's something which makes us a bit more relaxed. Nevertheless, of course, if we talk about trade conflicts, that is an area of concern overall.
Can you talk a little bit about the local for local strategy? Like, when did that come into play? Was it in response to Trump's first administration? And will you still see an impact if he was to impose tariffs on European goods?
Yeah. So actually, we've started with that already a couple of years back. And as I said, that has nothing to do with any administration or any kind of political. That's a pure business reason, coming from the market requirements, coming from our point of view. How can we be successful in the markets? And that needs a proximity, that needs local value creation.
Harald, I want to jump in because we have been living in, I feel like, decades of globalization, right? And that was the smart way to do things. So when was the turn? What made it make more sense to be kind of operating, producing in the market that you're selling? When did that switch happen? What was it?
In the end, it's a question of scale. Of course, you need a certain level of local business in order to establish an sizable organization. And I would say it started already almost 10 years back, I would say, with a clear local for local approach.
So where specifically are you moving operations? Because as we heard this week from President Trump, he wants stuff made in the United States. Where specifically are you making things now?
So in the U.S., we are located actually in Farmington, in Connecticut, and in Telford. So these are the two places where we have currently operations in the U.S. And yes, we are also continuously investing in these plants. We've just started a further expansion, and we are further investing in the U.S. In order to have a really sizable organization. We're also moving our R&D capacity into the markets just for speedy market answers.
Harald, we also talked about decoupling in your China business. One of the things that many companies are doing right now, thinking about whether they need to sort of separate their China entities. How far have you gone with that?
With that, we're already pretty far, actually. In China, we are running more or less, we would be able to run the operation pretty independent. We've built out a complete local supply chain. We have all necessary competences from R&D to treasury in the Chinese organization. And this is the difference. The one is the business approach, the local for local, and the decoupling is more from a risk management perspective in order just to prepare ourselves in case something happens that we could really separate. Yet, in a normal course of business, we still try to work pretty integrated in our global network. But yes, for China, we are already gone pretty far to run that operation separately.
Does that include financing as well? If you're thinking about domestic financing in China, can you talk a little bit about that?
Yes, absolutely. So we've just started a further expansion in our plant in Xi'an in northern China, actually, and then this is where we also raised the local financing. We also have a couple of operational lines from local banks, and this is really something which we started, I would say, in the last 2 to 3 years to also get more independent or more localized on the finance side.
Harald, it's fascinating because it sounds like you're getting local financing. You're not backing off of your China exposure, right, in terms of building up your facilities there. But you mentioned risk management. This is the reason why you have decoupled from China specifically. What's the risks that you're worried about and why you did that decoupling? What specifically?
So in the end, the big question is, of course, it could be that in China, with their more kind of internal perspective and in the increasing of an local independence of the whole country, actually, it might at some stage happen that inflows from outside could be pretty difficult, or at least that imports to China would be pretty difficult. And this is why we actually said, okay, next to our operation there, we also need to make sure that from the complete enterprise architecture, they could run separately. And this is what we actually prepared from a system perspective, from a financing perspective, and so on. Just in order to prepare if flows would be highly interrupted.
Understood.
Harald, just 10 seconds left. We have some elections in Germany coming up in February. Political risk, just 10 seconds.
No risk. We rather hope that we start to decrease bureaucracy and still have kind of stable framework conditions, because in the end, stability and planability is key for business success and for trust in investments, and that is what we need in Germany.
Yeah, they've had, 2 years of shrinking output and next to no growth in recent quarters. So certainly looking for some changes there. Folks, thank you so much. Harald, thank you. Harald Klaiber, Chief Financial Officer at Ebm-Papst, joining us from Germany. And of course, our own Nina Trentmann. Thank you. Senior Editor at Bloomberg News. Be sure to check out the Bloomberg CFO Briefing newsletter. You can find it on the Bloomberg on Sunday.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, let's get to a stock and company that's on our radar.
Speaking of Europe.
Speaking of Europe.
That's Novo Nordisk, because shares, well, I should say ADR is higher right now by 8.5%, up the most since August of 2023. This after its experimental shot delivered as much as a 22% weight loss in an early stage trial. It boosts investors' hopes, Carol, for the drug maker's pipeline. The results putting Novo back into the hotly contested race for which drug maker can deliver the most weight loss from a next generation product.
Yeah, this little race that's going on. Hey, let's get more into why. And we have our own in-house expert on all things GLP-1 drugs. Madison Muller is Bloomberg News health reporter. She is in studio. All right, great to have you here. Happy New Year. I feel like, have we seen you?
I know, I haven't seen you in a while.
And there's stuff going on.
There's a lot going on.
All right, what's the news here for Novo?
So this brings Novo back in the race, because I think investors were a little worried there for a minute. At the end of last year, a very closely watched trial of Novo's drug CagriSema, which is a next generation weight loss shot, fell short of investors' hopes and some of the bar that the company had set for itself. These next generation products were looking for like 25% weight loss. Mm-hmm. Novo's drug fell short of that, and that was an issue. The shares were down at the end of the year. I think investors were concerned, and now they are delivering again with another next generation weight loss shot called amycretin, which works similarly to some of the other drugs that are already out there, and so they're back in the running.
I thought the next gen product was not a shot.
So there are shots that are delivering more weight loss with potentially less side effects, which is, I think, one of the things that Novo is going for here. And then there's also the pills. So there's like two different things going on. And then you have Amgen, which is trying to develop a shot that can be taken less frequently. So we're seeing with these next generation products sort of a divergence in what companies are going after and prioritizing.
Is it also about these drugs, which initially were used to treat diabetes? Are they also looking to even make them better for treatment of diabetes? Or is this kind of all, like, am I missing something?
They are. They're testing them in diabetes as well. And so I think that is an interesting point that isn't brought up as much. Like a lot of, I'm not exactly sure about this drug that Novo that we're talking about today, but these next generation products are also being tested in diabetes.
Because Madison, when we talk about the market for these drugs, it's a combination of just people who want it for weight loss, right? And it's also for treatment for diabetics?
When we talk about the market size, as I think the most recent estimate from Goldman Sachs is 130 billion by 2030. That's just obesity.
That's just
so
weight
that
loss.
Doesn't even include diabetes. That's just weight loss, which is huge. And they've kept upping the market estimate just as these drugs have blown up.
Can I just ask you, so then when we think about that market size, when we talk about the number of diabetics in the United States, is there crisscross with the number of obese people in the United States?
There is some crisscross, yeah. Okay. And it's interesting when you think about insurance coverage too for these drugs, because some people, like, you can get Ozempic. If you have diabetes, you can get Ozempic pretty easily through insurance. But on the weight loss side of it, it's almost, it's extremely difficult a lot of times, and coverage is very patchy for getting coverage for weight loss. So they'll cover the drugs for diabetes, but not for weight loss.
Hey, what does the Trump administration mean for these companies?
She's smiling.
That's a good question.
I'm throwing a curveball here because you wrote about the Make America Healthy Again movement. There's a whole slew of folks, especially in that movement, who don't believe that this is the right way for people to lose weight. They think the intervention should be completely different. They shouldn't involve shots and pharmaceuticals, especially for kids. What are the folks you talk to, the analysts, saying about a Trump administration for these companies?
It's interesting. So, and we've talked about Jillian Michaels on this show before.
She was at the
MAHA Make America Healthy Healthy Again ball, and she's like sort of been brought into this circle, which is really interesting. And a lot of these MAHA people are pretty against weight loss drugs and just pharmaceutical interventions in general. They think, healthy diet, food, exercise should be prioritized first.
I mean, some people were up in arms that Larry Ellison mentioned a cancer vaccine.
Interesting. Yeah, I mean,
I saw that play out on social media.
It is, yeah, and the social media just discussion and around MAHA is everywhere. I mean, that is where a lot of this dialogue is taking place on X or Instagram. And I was at this healthcare conference last week, though, with a lot of investors and people in the industry, and there was a ton of optimism about the Trump administration from pharmaceutical companies, even the lobbying group Pharma that represents Eli Lilly and all of these big drug
massive,
makers.
right?
It's huge,
yeah.
And I was asking about RFK, I was asking about Trump, and I mean, I think that there's optimism around there being, a better deal environment under Trump, but also a lot of them were saying that they think that there's more common ground with RFK than there are differences, and that they will be able, I mean, he's not confirmed yet, but like will be able to work with him, and that obviously everyone at the end of the day, their goal is to make people healthier, and so they were less concerned than I thought that they would be. I was a little bit surprised, actually, by their reactions.
What about like NIH research and so on and so forth, where, sometimes significant developments come out of that work that is funded by the government? Like, how does that kind of roll into it?
To that point, Carol, there are already reports of scientists being told not to share their research outside.
Right, because there's this communication pause, which we've been trying to figure out what's going on with that. And it, to some degree, it's normal when a new administration comes in to sort of pause things and go through a review process, but it seems like it is sort of stymieing some of the research, and scientists are concerned that there's going to be ripple effects and that the pause may last longer, or certain things might not be allowed.
There's this tension here, though, because I saw today that the Trump administration withdrew this proposed ban on menthol cigarettes and flavored cigars. This was something that public health officials really wanted, anti-smoking groups really wanted. You have tobacco stocks higher today as a result. That doesn't sort of align with the Make America Healthy Again movement.
That was something we were talking about this morning, is like there is some misalignment with, I guess, and that's something that we're curious about, right? Is like, at the end of the day, we don't really know what Trump is going to do when it comes to healthcare policy. And so there's a lot of guessing, and the MAHA movement obviously has been very big and very influential leading up to the election. And so sort of how that plays out now is a question mark. And we are already seeing these divisions with Elon Musk, going back to weight loss drugs, loves Ozempic. He thinks everyone should be on a cheap GLP-1. And then you have people in the RFK camp who have the opposite opinion. So there's like a little bit of disagreements happening, and where these things sort of fall when it comes to policy, we don't know yet. We don't know who has more influence.
And some might say that debate might be good in terms of smarter policy, but for those who want to either invest or kind of figure out the significant trends, it's really tough. 30 seconds left here. Is it going to be another big year for GLP-1 drugs, likely?
Yes, I think the biggest thing this year is the oral drugs. Lilly's drug orforglipron has a big late-stage readout mid-year, and that's a huge thing that investors are watching for this year.
She would not have a problem with Boku.
I was just saying,
the way you say drugs,
repeat that word.
We're all like, what? Every time there's a name in a drug story, we're like, you do it. No, you do it.
That's so funny.
Well done. And it's a sector that we've been talking about so much for the last 2 years, but get ready for year number 3. Madison Muller, as I've said a million times, a must read on the Bloomberg at Bloomberg.com, and also on social when it comes to all things GLP-1.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
As you know, it's been a very, very busy week for President Trump. A lot of executive actions coming down. And this week, the president signed a flurry of executive orders against illegal diversity, equity, and inclusion policies. And they have left corporations and their lawyers struggling to grasp exactly what it all means. The president on Tuesday ordered federal contractors to affirm that they don't, quote, engage in illegal discrimination, including illegal DEI. He also directed government agencies to drop a list of publicly traded corporations, large nonprofits, and others in the private sector for potential investigations into compliance violations. Well, Simone Foxman has been following it all. She's Bloomberg News Equality team reporter, and she joins us here in our Bloomberg Interactive Broker studio. Simone, good to have you here. It's been a busy week of news coming out of the White House and President Trump in particular. You and Jeff Green and Emily Flitter, you put out a story. You note that the order lacked some specifics, so that's made it really tough for corporate America. Let's go back. What did we exactly get from President Trump? What exactly does it denote?
Well, we've gotten a couple different orders that relate to equality-related issues, and two specifically that relate to DEI. In the beginning, we got an order essentially that really had to do with the government, but companies, corporate executives, and nonprofit leaders, business leaders of all sorts, were really looking for how exactly Trump would handle private sector. Now, private sector, Trump can tell the private sector to do what it wants, but the only way he really has teeth to be able to force them to change policy is by federal contractors. Mm-hmm. Federal contractors include some of the country's largest companies.
There's a lot of them out there, right?
Yeah, exactly. Because they bid for service contracts. Bank of America, Amazon.
We just talked about Boeing.
Yeah. Lockheed Martin. And they employ tons of different people. So if you are a federal contractor, you have to, in your contracts with the government, agree to certain things. This has been a tool that the government has long used in order to change diversity policies. Mm-hmm. Going back to JFK, Lyndon B. Johnson, this was how they called on companies to make hiring more equitable for women and minorities, but also, people, veterans, people with disabilities, etc. Now, however, Trump, in one swoop of a pen, essentially undid Lyndon B. Johnson's rule from 1965, talking about taking affirmative action to create equal opportunities for minorities and women, and then also really tasked the government with going after companies and large organizations that it thinks may be violating some rules about illegal DEI.
Well, what is illegal DEI? Like, as I was reading it again, I'm like, what exactly is illegal DEI?
Well, that's the issue here, right?
Yeah.
It's worth noting that employers have not been able to hire or fire people based on characteristics like race, like their religion, like their gender for quite a long time, because those are parts of the Civil Rights Act. Mm-hmm. So most companies have spend a lot of time thinking about how to make sure that their programs comply with laws, even when they want to expand the number of Black people in their workforce. Especially have done that a lot, has spent a lot more time thinking about that since June 2023, mm-hmm. when we saw the Supreme Court overrule affirmative action in college admissions. That didn't have to do with companies, but companies said, hey, we got to make sure we're compliant with the legal thinking behind that. So now we have no definition of what the Trump administration really believes is different about illegal DEI mm-hmm. Than had been before. We just know they're anti-DEI, and now agencies have to go out and drop a list of up to 9 large organizations that they believe potentially in violation of that with their DEI policies. It's a big head scratcher, and that's frankly the impact that both critics and supporters of this order think, it's a chilling effect.
One of the things that we always talk about for companies, it's when there isn't a clear way forward, right? They may not like an answer, but at least they understand kind of what the rules are. And it sounds like there's a lot of confusion. I'm assuming, or what did you guys hear from the corporate community or those folks that you got in touch with about, reaching out to lawyers, the legal community? What are you hearing? Are they getting tons of phone calls to say, I'm not quite sure what this means?
Absolutely off the hook. And when we were reporting this story, we spoke to plenty of lawyers who were like, we're still digesting this. We're not really sure what this means. In part because the agreements that some of these companies have had for violations in the past, the government found they were discriminating against Hispanic workers, say. Mm-hmm. So some of the remediations to that involve plans to hire more Hispanic workers. A lot of those plans are under question now because of the way that this executive order was written, especially
so
for
companies actually putting things on hold.
They're allowed a certain time frame to kind of figure things out, but I think everyone's trying to figure things out. And I think it's worth just impressing upon you that companies don't believe they're in violation of the law with their DEI programs as they've existed. When someone tells them that this piece or another might now trigger some kind of legal action, they change it. But as yet, there's nothing really in here that says, well, this part of DEI, we now consider this more illegal than it was 2 days ago.
Because this is what I'm thinking. What if a company just says, it's so funny because we have spent years, even decades perhaps, or at least a decade, talking about McKinsey studies and other studies that's saying diversity at a company, diversity on a board is actually good for a company. It's good for the bottom line. It's good financially. It just makes sense. I can't tell you how many venture capitalists we have come on and say when you ignore, a black population, a Spanish population, a female population, LGBTQ, you're ignoring a part of a market that, let's be who the Bloomberg audience is, a market that you can make money off of. So it's kind of interesting. So if a company chooses to be diverse, might they be breaking a law under what we're hearing?
It's really unclear at this point. The thing is, I say DEI policies are not defined in here. It's really a very different. DEI policies are very different from institution to institution.
Yeah.
And in many places, things that are just good governance, good cultural things have been brought under the aegis of DEI in the last couple of years as this has become a thing and as companies have really, pushed a DEI department, have maybe appointed someone to oversee these programs. So things like broader mentorship within a firm that might be open to everybody will now live under a DEI department, as may recruiting efforts from disadvantaged communities of all sorts.
One thing I want to ask you, and this is something that I know you and Jeff and the team have really reported on big time here at Bloomberg, is that it feels like, coming off of the murder of George Floyd, we talked a lot about racism in America and equality once again, and I felt like DEI inclusive efforts were really ramped up. But I do feel like in the last year and a half or so, we increasingly are seeing employers let go of maybe their head of DEI efforts, even before Donald Trump was back in the White House. And we've seen this rollback on DEI initiatives. We've seen it, I feel like, every week or two or for a while. You've had JP Morgan, Goldman CEO, they're maybe resisting some of the calls to roll back. But I do feel like you are seeing companies pull back maybe on their ESG efforts. Like there just feels like there's a change in the mood. A change in
momentum, a vibe shift completely, and a vibe shift that's shifted even within the last 72 hours. To your point, just earlier this afternoon, Target said it would roll back its DEI initiatives, said it would conclude a 3-year DEI goals, not set them publicly going forward again, conclude the Racial Equity Action and Change, a 5-year initiative about bolstering Black employees' career development. I mean, I think the question is now, how many executives come out and say, actually, DEI or something like that, our inclusion and belonging programs, those have been good for business because they allow us to retain talent, and that's really valuable. They allow us to see new market opportunities. And how many more companies do you say, okay, we're actually going to eliminate that department entirely, say goodbye to these number of employees? I think it's a little unclear. We just haven't seen that many people follow the lead of JP Morgan's Jamie Dimon, David Solomon at Goldman Sachs. Chuck Robbins had also, at Cisco, had also defended his programs at Davos. It's really unclear to me exactly how the division comes. So, how do you guys think about it in terms of reporting? I guess it's kind of a little bit of a wait and see, because I thought what was interesting in your story today, your story and Jeff and Emily's story, is that there is some thinking about Donald Trump in the White House. Some would say, this is part of what he does, kind of upends everybody, a little bit of confusion, and then the dust settles. So I just do wonder if some folks are thinking that's the same thing for DEI initiatives. Absolutely. And I think a big question now is, will this stuff still be called DEI in 6 months? Because if the way of keeping programs to retain employees simply becomes not having them live under the aegis of DEI, then that seems like an easy one for corporate America. It seems very easy to rebrand. We just don't call it that, right? Just don't call it that. And I do feel like
like we're hearing that from consultants who say, listen, we're not necessarily anticipating from the companies that we work with that they're going to stop these efforts.
Yeah, but you do really wonder how many companies and how many corporate executives really stand up there and say, this is where I put my foot down. This is what I'm going to defend. Even if you sue me, even if you file a shareholder action. And admittedly, some of the companies that have been under fire, Deere and Company, which made some pullbacks to its DEI program, there were a slew of shareholder proposals this time. They're recommending that their shareholders vote for neither the pro ESG, pro DEI ones or the anti ESG, anti DEI ones. So we'll see how they fall.
All right, so we're gonna be finding our way through this. It ain't over. Safe to say.
It ain't over.
Simone, thank you so much. Really appreciate it. Simone Foxman, Equality Team reporter at Bloomberg News, joining us in our Bloomberg Interactive Brokers studio. Find her on X at Simone Foxman, and you can read more on her story. Just head to the Bloomberg and at Bloomberg.com.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got just about 20 minutes, just under 20 minutes to go until we wrap up the trade on this Friday and for the week overall. You just heard from Charlie and Bill Maloney. We've got stocks just hovering near their lows of the session. Earlier, we were talking about that this was kind of the best start, I think, for a presidential year, going all the way back to Ronald Reagan. We've seen certainly a bounce in stocks overall in this shortened trading week.
Interestingly, he was the person to say "Make America Great Again" back during his campaign as well.
Way back when.
Yeah.
All right, so we'll
see how the weekend's up.
We're almost there. Let's get to it with our Drive to the Close guest. Mark Malek is here, Chief Investment Officer at Muriel Siebert Company, joining us in our Bloomberg Interactive Brokers studio. What?
I just want to dive right into it because you walked in here. You start talking. I'm like, the microphones aren't on yet. Save it for when the red light goes on, because you're saying the VIX should be higher. There's stuff out there that's not priced in right now. What do you see? Or do you see warning signs flashing ahead of us?
I'm not so sure they're warning signs as much as when you're watching the markets all day long, you're watching the tape, you're seeing all kinds of crazy stuff, you're hearing all kinds of things, you're hearing about menthol cigarettes, and you're seeing things go up that shouldn't be going up, and you see things that are going down that shouldn't be going down, and then you glance over to your screen and you look at the VIX and it's at 14. And you're thinking to yourself, wow, I would suspect, given this market right now, given that there's so much noise out there on the tape, that this would be trading a little bit higher, certainly the VIX. And so the concerning thing is with the VIX is that when it moves aggressively. Mm-hmm. And when it sort of spends a long time where you perceive it shouldn't be like low, it tends to be like a coiled snake. So, it's sort of what happens is the smallest little thing can cause an agitation. And so you could find yourself at 28 very, very quickly, and everyone's scratching their heads, what to do.
Isn't it fair to say, though, Mark, that, certainly when it comes to policies out of the Trump administration, a lot came at us this week, but we're still waiting for what really are the particulars when it comes to tariffs. What are the particulars when it comes to tax strategy? What are the particulars when it comes to regulatory easing or not? So it's kind of maybe, we're in this wait and see mode that even though there are a fair amount of questions out there, we're kind of waiting, and maybe that's where markets are.
Yeah, I agree. I spend a lot of time, going over that age-old Wall Street adage of signal and noise, right? So, we're just taking in all the noise right now and waiting for some real signals, and they're just not there yet. And in a vacuum, it's why I believe you see the market making these interesting moves.
What about earnings? I mean, if you look at the S&P 500, we're up 1.6% for the week. That's pretty strong.
Yeah, well, earnings have been coming out pretty well, right? Mm-hmm. Pretty strongly. I mean, we're really at the early days at this point, but if you look at earnings, if you look at earnings growth so far through today, you're talking about like what is it, like 16% earnings growth and 8% on average beats. That's pretty solid. I mean, financials came out really, really strong. All the banks are done. They look great. And every time that happens, well, generally speaking, those set a good base, right? Of course, it helped that Netflix knocked one out of the park this week.
That was amazing.
Yeah, an interesting one.
What do you think? Are tariffs signal or noise?
At this point, they're noise, right? It's a lot of discussion. I mean, the big question is, we all, I think, agree that tariffs are inflationary. But what kind of tariffs are we talking about? We know what might happen, but until we see what happens and how long they're in effect, if we're talking about a large tariff, but it's put on only for 2 weeks for a negotiation, then it comes off, it's not inflationary. But if you're suddenly going to levy a 60% tariff on all goods coming from China and it's long term, you can bet that is certainly going to be inflationary. I believe the market has really sort of factored a lot of that in already, though you wouldn't know it based on the way it's moving up and down, even though you have the slightest hint moving the market. But I think most of the big players at this point are assuming the worst.
I feel like next week is a big one, right? We've got the first 4 of the Magnificent 7 reporting earnings. So we're talking about Microsoft, Meta, and Apple among them. I mean, these are big earnings, always are, every quarter. You've also got a Fed meeting on Wednesday. And while we don't really expect anything necessarily, when Jay Powell says something, we also kind of sit up and take notice. So how might next week be an important week in terms of the trade and maybe sentiment and maybe some action on the VIX?
Yeah, you certainly you hit it on the head. Next week we got those big earnings. I think we have 4 of the Magnificent 7 next week, all very different. One of which is Tesla, which is its own indicator that I'm not really sure what it indicates at this point. Maybe it's another sort of sentiment indicator on how the president's doing. But certainly, we get our first hyperscaler next week. We get Microsoft, which plays on both sides of the AI ecosystem. So I think that's going to sort of set a lot of tone for what we can expect in that group of stocks for sure.
It's interesting. I was listening to Paul Sweeney and Alex Steele on Surveillance a little earlier today, or Bloomberg Intelligence, excuse me. And they were talking about the investment that Mark Zuckerberg announced today, the increase in CapEx. Mark Zuckerberg even said over the summer, we might be over-investing in AI. Paul Sweeney was like, I don't know. I think we might look back in a year and say this was kind of silly spending at this point. Are these companies overdoing it?
I don't believe so. I think that the market has been a little rough on some of these hyperscalers, but the truth of the matter is this infrastructure is necessary for all AI that's going to happen in the future. And this is the investment that has to happen. And those that make the investment are going to reap the rewards. On the side of Meta that you brought up, that's an interesting one because they're not necessarily a hyperscaler, but Meta was really the first company that came out and said, hey, we're using this AI to make more money in our core business. And they were rewarded for that. So, we're going to be listening to them next week and see if there's a follow-on story. But that type of investment, I feel like you would actually be punished if you weren't talking about those types of investment at this point.
Just got about 45, 50 seconds left here, Mark. So where would you suggest investors think about allocating money in this environment?
Yes, so until we hear any new signals, we have been talking about, we've been looking at a continuation of what we saw last year. Okay. Essentially, tech is leading the way, not a lot of breadth. There are a lot of value opportunities out there, but there are no signals that suggest that those sectors are going to have great returns. So you're going to see a continuation of financials, even though they're a little rich at this point. And I think tech has the biggest potential upside, the broader tech.
So the drum that everybody keeps beating about small caps and mid caps, not necessarily for you
guys? Listen,
guys?
You could try to get cute, but I think people who've been trying to get cute have been on the losing side of the performance game lately. So.
I don't want to be cute. I want to just have returns. That's what I want.
Yeah.
We're going to leave it on that note. Listen, thanks. Fun to have you here in studio. Mark Malek, who's Chief Investment Officer over at Muriel Siebert Co.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.